how much to invest first time. If you are a brand new investor and you're wondering how much you should start with in order to invest your money, that is what we are talking about in today's video. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. All right, if you are a first-time investor unsure about how much money to actually be investing, then we are going to dive into the things that you should look at in order to figure out that exact amount. And I'm going to share some tips with you that I used when I got started investing. And we do want to be careful on how much we are investing when we are brand new because of our financial situation. All of us are in different circumstances, so we don't want to be over-investing, but we also don't want to be under-investing. There are a few different factors to consider when you are determining the amount to invest for the first time. We want to take a look at your financial situation, your risk tolerance, your investment goals, and your time horizon. It's important that you invest enough so that you can retire one day, but we also don't want to be jeopardizing our current financial situation. You definitely want to take a look at where you currently are with your finances. If you haven't done this, you'll want to set up a spending plan. You want to see exactly how much money you have coming in and how much money you have going out. And you also want to list out all of your different debts that you may have, and then make sure that you have an emergency fund or build up an emergency fund. And then we can take a look at investing. A lot of people struggle to know whether or not they should be paying off their debt or investing their money. The way I like to look at this is to look at the interest rates on every single debt that you have. If that interest rate is 8% or higher, I would say focus on paying down that debt first and then invest your money. Because on average, the stock market will return 10%. And when we adjust that for inflation, which is usually 3%, we're getting a 7% return on our investment. So if we have an 18% interest rate on one of our debts, then most likely we are not going to make more money in the stock market. We would make more money by paying off that debt first and then investing in the stock market or in another type of investment. And if you want help in breaking down how to pay off your debt, I have another video for you. I will leave a link above. You can check it out later on. And while we are taking a look at our debts, we want to make sure that we have an emergency fund or that we are building up an emergency fund so that we are not going into more debt. And one way to do this is to take anywhere from 3 to 6 months worth of your expenses and have that be the amount for your emergency fund. And once you are creating this emergency fund, I personally like keeping mine at a separate bank from my normal everyday checking account so that I am not tempted to pull that money out and spend it. I like using Ally. They have a really good interest rate on their savings account. It's at 4% right now. But that way I can earn a little bit extra money for the money that is just sitting in my savings account. And I would for sure build up this emergency fund as soon as possible. The most money you can put toward your emergency fund, the better off you're going to be because we don't know when that emergency is going to happen. So the sooner we have the amount there, then we are not going to have to use our credit card and get into more debt. And then once you have your emergency fund set up, if there is anything else that you want to save for, you can definitely do that. And another reason I like using Ally is because they have these buckets inside of their savings account. So if you wanted to save up for a trip to Hawaii, then you can name your bucket Hawaii and start transferring money to your Hawaii bucket every single month. And then you can see exactly when you reach the amount you need for your Hawaii trip. And if I am saving up for a short-term goal, I also like to invest my money. So I have a percentage that I do every single month or a certain dollar amount that I do every single month. And that goes toward investing. It goes into my investment account. And then if I'm saving for something else, I can take a certain percentage from my income and save up for that short-term goal. And that way I'm still making money in the stock market and still saving up for something exciting. Or it could be something boring if I'm saving up for taxes. But if you aren't saving for any short-term goal right now, you can definitely put all of your extra money into your investment account. And you can set up an auto transfer for that investment account. And I forgot to mention, you can definitely do an auto transfer to your savings account to Ally if that's who you want to use. And that way you can automatically build up your emergency fund. And one of my friends attended a class, a workshop that I was teaching, and she came up to me after and said she was going to set up her auto transfer to her savings account. And she did that, and then months later she sent me a text and said she was so excited because she had so much money in her savings account, and she knew that would not have been there if she had not set up that auto transfer. So make sure and set up that auto transfer if you think you are going to forget, or if you just want to make your life easier. And then going back to investing, you can definitely set up that auto transfer, and then some investments allow for an automatic investment to happen. Some of them don't. So if you set up an auto transfer to your investment account, you want to make sure that your money is actually being invested inside of the stock market and not just sitting in your account in cash. And if you want help automating your stock market investing or just getting started with the stock market investing, I have a free masterclass where I go over how I can help you get started in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. And when we are setting up that auto transfer, that means that we are utilizing a system called dollar cost averaging. That just means that we are investing a certain amount every single month or 2 weeks, whatever we want to do. But we're investing that same amount with a certain time frame, and it doesn't matter the price of the investment. We can buy it when it's high, we can buy it when it's low, we can buy it when it's in the middle, but we just continue to dollar cost average our investing. This really helps to mitigate our emotions that are tied to investing sometimes, because if we are seeing that the price is so high, we may be tempted to not invest our money and hold off, but the price could continue to rise, and then we would regret not getting in. And then even if we see the investment drop, if the price is really low, we may think, oh, maybe it's going to drop even further. Maybe I should wait. And then we wait, and then the price goes up. We just have no idea what the market is going to do. So of course, it is more about time in the market, not timing the market. So let's talk about this amount to invest for the very first time. Honestly, you can start with as little as $5. And if you're wondering how to do that, I have another video where I go over how to start investing with just $5. I'll leave a link above. You can check it out later on. But I'm just letting you know that you can invest as little as $5, and you can go up to thousands and thousands of dollars. So depending on your situation, if you have your high interest debt already paid off, then definitely start investing your money and take a look at your spending plan so that you aren't putting too much into your investment account that you aren't able to pay your bills or have an emergency fund. And if you're thinking, well, okay, I can definitely start with $5, maybe I'll just do that. We can always start with that small amount, but the more money that we are able to invest, then the more money we are going to make because of compound interest. I want to share a calculator with you so you can see exactly what I am talking about. All right, let's enter some numbers into our calculator so that we can see how this works. So if we did want to just start with $5, we can definitely do that. And we are going to say that we have a 10% rate of return, which is pretty average for the US stock market. And then we're going to say we'll do this for a period of 20 years. So if we just start with $5 and we never contribute anything else, we would have after 20 years, $36, which is okay for $5. But if we're able to invest even more money, let's say we're able to invest $100 a month. Then after a period of 20 years, we will have $75,973, right? We can take a look at this graph and see all of this green. That is compound interest. That is not money we have put in. We have put in the blue amount. These are our contributions. So we're able to take advantage of compound interest when we are investing our money. Now, let's say we have money sitting in our savings account and it's over what we want in our emergency fund, and we're not saving for another short-term goal. So let's say that we have 30 grand sitting in our savings account. So let's say we have an extra 30 grand that we can invest. So we'll put that 30 grand into our investment account, and then we're going to add, let's say, $2,000 per month. And we're going to leave that at 10% rate of return and over 20 years. We will have $1,738,580 if we were to invest that $30,000 and then just add $2,000 every single month. So you can see the power of compound interest. And I want to show you one other thing. Let's say that we are only going to invest our money for a period of 10 years. So we're going to change this to 10 years and we have a balance of $490,901. And now we're just going to say that we're not going to invest anything else for another 10 years. So we're going to put that as our beginning balance, the $490,000, and then change this contribution amount to $0, and then wait 10 years. We're going to have over $1 million, $1,328,889. So you can see if we just start investing as much as possible as soon as possible, we are going to have so much more money. For me personally, when I got started investing in the stock market, I just started by buying one simple stock. I was really nervous to invest in the stock market, but after I bought that first stock, I thought, okay, you know what? Now that I've done that, I can definitely buy another and another, and I can get better at this process. And that's exactly what happened. My first stock was actually just a tip from a random blogger. And then once I did that, I thought, Tiffany, that's not the best way to invest. So I started investing in companies that I was familiar with, that seemed stable and seemed like they were going to grow over the long term. And then I found an index fund that I really like, so I started investing a portion of my money into that index fund. And then I have about 10 different individual companies that I invest in still. And if you want to know which index fund I invest in, I have another video. I'll leave a link above. You can check it out later on. But honestly, I just kept it small in the beginning, and then I continued to increase the amount that I was investing and felt more comfortable with investing. So it got easier and easier as I went. And if you're thinking it is scary to invest in the stock market and it just sounds complicated and overwhelming, that is part of the reason I started my business. I love helping people get started in the stock market so that they can grow their wealth over time. So again, check out that free masterclass where I go over how I can help you invest in the stock market. All right, comment below and tell me if you are going to make your first investment in the stock market or if you already have. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.